Hello, this is Mark from tradinginformed.com and welcome to this video on a simple swing trading strategy. Now this video is a follow-up to a previous video that I recorded 2 years ago in 2016 in which I introduced a trading strategy, a swing trading strategy for the S&P 500. Now in this video I want to review that strategy and in particular to see how it has performed in the recent volatile markets. Now all traders will know that the markets have had a little bit of a change in 2018 compared to the very calm 2017 and years preceding that. 2018 has been different. We've seen lots of volatility, we've seen wild price swings, and we have seen many traders and trading strategies struggle in these conditions. So I wanted to have a look at this swing trading strategy and see how it has performed in the years leading up to 2018, and in particular to compare it to how it has performed in 2018 itself. So the chart on the screen at the moment is the S&P 500 large cap US stocks, and there's obviously a lot of different ways to trade this market, a lot of different ETFs that allow you to get exposure to this index. Now we can see on the right hand side exactly what I was saying about the volatility. We can see very large candles, very large trading swings, and also the often violent swings from positive to negative. If we can compare that and contrast with the market preceding that, particularly 2017, but also the years up to 2017, much smaller candles and a much more steady upward trend. Now it has been relatively simple to trade the markets up until 2018 unless you were only trading short, in which case it was quite difficult. But 2018 has given opportunities for both bulls and bears to get into the S&P and all other major stock indices. So let's have a look at the trading strategy. Now the key thing we're looking for here, it is a simple swing trading strategy. The key thing that we are looking for here is the tendencies for markets to make a fake out move. So we're going to trade long if we get a close down, and we're going to trade short if we get a close up. Now this may sound counterintuitive, but we are going to protect ourselves by always trying to trade in the direction of the major trend. So we can see on the screen a candle that closes down. As long as the trading's up, then we want to be entering long here. Likewise, if we are going to trade short, we're looking for a candle that trades strongly upwards, and we want to go short at that point. Now the way that we're going to analyze this trading strategy is using the spreadsheet. Now I've got the spreadsheet on the screen at the moment. This is a trade-informed backtest model, and it is a updated version of the previous model which I presented in the previous video. Now this spreadsheet is a way of backtesting the financial markets. You can use it to test all sorts of different strategies, but what I have pre-programmed in here is the strategy that we're going to talk about today. If you want more information about these spreadsheets, there is a link on the screen to the Trade Informed website. If you want to click on that, you can see the backtest models that are available. They are all built in Excel, and as you can see in this video, there's lots of opportunities to tweak, fine-tune and optimize the trading strategy to make it your own. So as I said, this is a Excel-based model, and what we've got here on the left is the price data, and in the middle we've got quite a bit of calculations, and these are very common technical indicators that everyone will be familiar with. Now, I've used the Japanese candlestick terminology, a Marubozu candle, which is basically a block candle that if you see one, you'll know it on the screen. It opens near the low point or at the low point and closes near the high point. Would make it a long Marubozu, and if it did the opposite, then it would be a short. But in this trading strategy, we're looking for fake out. So I'm using this as a signal for short here as a signal to trade long, and a long here as a signal to trade short. As I said, I am using a filter to identify the main trend. And what I'm using in this strategy is the linear regression. Now, the linear regression is a technical indicator or a statistical tool that I find very useful. And in this case, what I'm going to be doing, the linear regression is the closest fit or the best fit straight line through a series of data. And the way that we use it most commonly in trading and technical analysis is in the form of a linear regression line or a linear regression with standard deviation channels. Now, it's very useful for this purposes, and what I'm going to do is use a 200 period linear regression, so it's quite long, quite slow moving, and I'm going to identify the slope of the linear regression, and if it is pointing upwards, I'm going to be trading long, and if it is pointing downwards, I am going to be trading short. Now, if you want to hold on till later in the video, I will play around with this and look at some different options for it, but this is my base situation. Okay, so we've got the filter, we've got our entry signal, and over here we have the calculations for the trades. Now, on this page of the model, we have the variables, the inputs into the model, and we have the results. We can see over here that we can adjust things like the profit target, and a stop loss, and we can see how these make difference to the trading strategy. We could put a trading stop and again see what difference this makes. The strategy here is using some different ways to exit the trade. So we're going to be using a profit target if that is set, but also we're going to be using the Bollinger Band. Now, Bollinger Bands are pretty handy technical indicators, and one of the things that they are useful for doing is helping us to exit the market when it is at some sort of a short-term extreme. So we're actually setting the strategy to exit the position when the closing price is greater than the Bollinger Bands. And you can see that we can set this, the multiple of the bands, and it will affect the profitability of the strategy. Now, another thing we've got here is the percentage coverage of the candle. So 65% means that the body of the candle, the difference between the open and the close, as a percentage of the high and the low of that particular candle. So if I set this to 85%, you can see it makes a difference. It actually tends in this case to increase our win percentage because we're getting more strict candles. I'll put it up to 95%, and again we can see it makes it different to our win percentage and our strategy performance. The percentage size is simply how large the candle has to be, so we're not entering on any really tiny candles which can occur when there's not a lot happening in the market. Now we've got a new thing here, and the previous strategy, when I looked at this in my previous video, I only looked at long trades, which was really pretty much the only sensible game at that time, and has more or less been all the way since, as we could see on the chart. However, things have changed. Whether they're going to change back or not, we don't know at this stage. But I've introduced short trades, but I've introduced them with a filter here. So we've got a checkbox that we can click on and off, and we can see it makes quite a difference to the strategy. Includes adding in some short trades. Now the other small change that I have made is included a filter for the dates, and this just allows us to look at how the strategy has performed since a particular date. So if I click this and we have a look how it's performed since 2010, we can see we get a different answer to since 2000, how it's performed since 2012. And once again, we can see we've got the best part of this market. This is the calm market that I've been talking about, obviously with a few exceptions, but this is the period when it's performed particularly well. So since we last looked at the strategy, since 2016, let's do this to March 2016. We see once again it's really held its own pretty well. We can play around with these. We get slightly different results, but on the whole we can see that it has performed pretty well. But now I think the key thing is to look at how it has performed in 2018. Now at the time of this recording, we're still in the early part of 2018, so we don't have enough results to really give us anything conclusive. However, I wanted to look at the small number of trades that we have got and have a think about. You see, we can just play around with these numbers and see if it makes any difference. Often what we're trying to do with the trading strategy is trying to disprove it. We're trying to prove that it doesn't work, and that's a pretty good approach to have, because if you don't trust it yourself, you're never going to be able to trade it, because at the first sign of trouble you will abandon ship and give up on the trading strategy. Now what's interesting in these small number of trades, the way I've got it set at the moment, we've got 10 different trades. Now we can click onto this page and have a look at them. Now we can see that we have had some pretty shocking trades. We've had a minus 4.3% trade, which would have been pretty painful at the time, and a minus 2.5% trade, which likewise would not have been fun. Now the early part of 2018 we were getting short trades, because this analysis is looking at short trades, and we were getting, the early part of 2018 was really pretty calm, so we were getting beaten on the short trades. But here we can see as we go later into 2018 we start making some quick profits on our short trades. With the long trades, you can see that we've made a huge recovery, 7% trade there, and a couple of pretty decent recovery, including this last one here, which is the most recent recovery. If we have a little look here and see the capital graph, this is based on the cumulative percentage of each trade, we can see we've performed okay. Now this graph will change depending on what I set these values at, but I'm not looking for a fine-tuned strategy here. What I'm looking for is a strategy that is robust in different situations, and really that is what we have to, this is what the best we have to hope for, because we cannot see the future. So I want to click all these things, see if anything makes a difference. Seeing anything is going to disprove the strategy. Well, I think what I've shown in this video is that this trading strategy is holding its own in what has been a very difficult market so far. We don't know what is going to happen in 2018. The markets could well get more volatile. We could see another bounce down. We could see all sorts of things happen. On the other hand, we could see a return to the relative calm of, or the absolute calm, in fact. We just don't know what we're going to have. So what we need to have is either a range of strategies or a trading strategy that can cope with different market conditions. So I hope you enjoyed this video. If you liked the video, please remember to hit the like button and to subscribe to this channel. And if you'd like more information about trading the financial markets, learn how to backtest your trading strategies and about analysing the financial markets in general, please go to www.tradeinformed.com.